Hello, everybody. Welcome to Trading the Close. My name is Drew Dosick, and today in the markets, it was a little bit of a sleepy one with about half of the volume, half of that average volume that we're used to. But that's to be anticipated because we do have holiday time frame right now, which does usually equate to lighter volume. Now, the FOMC minutes were released, and half of the Fed officials were calling for rate cuts. The others were not. But they did also imply that further rate cuts are on the board if inflation starts coming down. All right. So that's the big key that they're watching. So we're going to be also watching that data when it gets released in the coming weeks. Till then, guys, let's hop into the market summary board to see where everything panned out today. We've got the Dow Jones down 0.18%, NASDAQ down 0.24%, S&P 500 down 0.15%, U.S. oil, decent update today, up 0.21%, gold up 0.35%, and Bitcoin starting to push a little bit higher off of that consolidation, up 1.08%. All right, so let's check out the S&P 500 heat map. And as we see here, we've got NVIDIA down 0.36%. But basically, guys, it was somewhat of a flat to negative day in the markets. This is all a little bit unusual. If you remember from yesterday, I was talking about lighter volume generally has a float potential to neutral to upside bias. We're seeing a couple down days here in the market going into the new year, tomorrow with New Year's Eve, and then the markets are closed on Thursday. So anticipate more volume to hit the markets back. Maybe a little bit more on Friday, but then more so the following week when the rest of the institutions and the bigger players come back into the offices. And you see here, though, we did have a positive day on Meta, nicely up 1.1%. We'll take a look at that chart here in a little bit. Tesla continued to slide a little bit, down 1.13%. Palantir down 1.81%. Netflix down 0.39%. And aside from that, not a lot of big movers in the market, but we do see a lot of red. And we should see red on a down day in the markets. Flipping into the S&P 500, guys, just to highlight, you see down here at the bottom of the screen. Now, we've had a lot of volume come through right at the end of the day, but you can see here it's nearly half of the 30-day volume with 46.62 million shares traded and 81 as the average. So almost half of the volume that we're getting. But you see here with today's price action, we started coming right back down into this parallel channel. Now, I was anticipating with this lighter volume, we were going to trace this trend line. And so far, we're starting to separate from it down to the downside. Is that foreshadowing what we're about to see come in January? A little bit more pressure. We'll see and find out coming later this week and into next week. Next up, the Qs. The Qs, as you see here, also a minor down day, but also separating from this previous resistance. If you're a bull on the Qs, you would rather see price hang tight a little bit around this area and resistance, consolidate so it can bust and go through this resistance level. Not happening anytime today nor yesterday. So we'll see if we can't have a little bit of a push up tomorrow in the markets, get us closer to that resistance level of $624. Otherwise, we're going to be coming down and testing the bottom of this parallel channel right around $612. Into the SMH, also having a down day today, down 0.25%. We see here a little bit closer of consolidation that is occurring from this Friday candle, from this resistance area at $367.56, showing you guys that there's a little bit more strength in the semiconductors compared to the broader spectrum of the Qs. Even though the Qs do have a lot of semiconductors in them, this is a lot more specific and honed in only on the semiconductor space with the SMH ETF. So we'll see if that continues moving sideways throughout the end of this week. And if it does, that could be bullish consolidation for a push through this resistance into the next level of resistance at the top of the parallel, just under $380. Next up, the IWM, one of the indices that you did see today with some decent downward pressure, again, separating from this trend line. But what I did mention yesterday is that anytime these trend lines do break, they often like to go back and retest where they broke from on that trend line, which could be all the way up here near $257 if the markets get going at the start of the new year. Otherwise, this break does not look so good. for the near term, folks. Right now, if this continues pushing down, we will have a little support just under $245. You can see here from this consolidation, as well as the bottom of this range here at the beginning of December. That area should be the next level of support, which could give it a bounce, potentially coming back up here to test this $254 range. Next up, Bitcoin, guys. Been highlighting this for a past week or so. If you look here on the charts, you see the price actions moved up and has had some beautiful sideways consolidation. That consolidation is near-term bullish consolidation, but the larger pattern is showing a downward move and sideways consolidation. That's a bear flag. So we've got conflicting signals. Near-term pattern is not as strong as the longer-term pattern. So in order for this to get out of this longer-term bearish consolidation, we first need to beat this 50% area of the parallel at $93,000, and then that can release price action to go up and test this inclining trend line right around $103,000. But so far, Bitcoin's doing all right. Even though it's not putting in big gains, it's putting in great consolidation on the charts, which does imply near-term upside to test this 50% area of the parallel channel. Next up, gold. Now, gold did have volatility today, not as much as silver. And we're going to get into that chart here in a moment. You see this big downward movement, paused right here at the 50% area of the parallel. Today, we made an attempt to push higher, getting rejected, settling in right here at this 50% area of the parallel, just above $4,300 per ounce on gold. Let's see if this plays out a little bit further. And if it does, it's going to be bearish consolidation, which would imply a move lower to the next level of support down here at $4,238. Now, silver, guys, look at the story on silver. Silver is trying to be relentless. Now, this bounce did fail to recapture all of the losses from yesterday, but entirely it wasn't a massive failure for silver. What would have been worse is having price action consolidate near the bottom of the candle like what we've seen on gold. But ultimately, we didn't recapture all of the losses yesterday, so this bounce near term for today has failed. But there is new legislation coming out of China restricting some of the silver that will be sold throughout the world. So there could be some more upward movement in silver in the near term. Keep in mind, this has been almost like a meme stock in a way, with as much as silver has pushed up recently on the charts. I still do have a measured move target from the cup and handle pattern up at $89.38. We could have very well hit that in the coming week or two. Notice also there's the very top end of this parallel channel is resistance there as well, right around $88.26. This resistance zone should likely push the price of silver back down at, I would say at minimum, testing this inclining trend line right around $71. But today we already had a decent sell in silver and a nice pop right back up. So silver is staying relentless, at least for the time frame right now. We'll see how long that lasts. I'm really looking for that $89 target to be tagged before then a new pattern develops and any sort of proper pullbacks come into the chart of silver. Next up, U.S. oil, still consolidating really from yesterday. Not too much new to report, except for if you can see here on the charts, we've got another trend line that is developed. You can see here, this area will be near-term resistance on the chart of oil should it start pushing up. That area is not far away at $58.96. If it breaks through there, we're talking around $60 to $61 as the next major resistance zone on the chart there of U.S. oil. Next up, nat gas, really just chopping sideways again today. Now, it did attempt to get back up. Notice these wicks right here that are developing on the chart. Right here on this chart, you see these major wicks that are coming up. That's telling you guys there are sellers here in nat gas. Now, there could be several sellers, but once those sellers exhaust themselves, then the price can start moving back up on nat gas. So it's interesting to watch this all play out, especially when the wicks come up, because that's telling you right there, there's still people sitting right there waiting to push the price back down on nat gas. We'll see how long that continues. And if it does, this is still a bear flag pattern. And a bear flag pattern generally wants to go down to the next support level. And that next support level is at $3.30 right here on the charts. Next up on Meta. Now, Meta had a decent day today for the mega caps, pushing up 1.1% amongst this small and light volume in the markets. But notice what's happened here. We've had Meta that has recently broken an inclining trend line right here, which would imply further downside, but it's fighting its way to get back up and remain positive, putting in bullish consolidation at the time frame right here. That could lead to a move up here to about $704, the 50% area of the parallel. Also notice when I draw a trend line over from this area on the 50% area of the parallel, just if I draw it directly over, that comes right to the underside of the consolidation, right, that took place in October of 2025. So that area will be resistance for it to get through. If we do have this bull flag play out, we should move up to this 50% area of the parallel, expect consolidation in that range. Then it can break through not only this 50%, but this consolidation that occurred back here in October and push up higher, potentially to the $750 range for Meta. Meta's had a tremendous decline since its highs back here near $800, all the way down sub $600. So it makes sense as this mega cap could get attention from other investors rotating out of some of the hot plays. All right, next up, we've got Under Armour. Now, Under Armour had some news come out today. Canadian billionaire Prem Watsa has bought 15.6 million shares of Under Armour over the past week. Investors heard this and also gained a whole bunch of confidence in that move. And you can see here pushing up 8.59%, also closing above this longer term declining trend line that you see here on the chart. The price had recently broken down under in September and looked like it was even headed lower, folks. But today might be the day to start a rebound effect on Under Armour. Now, where will Under Armour go from here? You can see I've got resistance levels laid out at $5.15. Followed by $5.51. But if I take a trend line and draw it over here from this pivot in December 9th, connected over to the pivot that occurred there in July, notice how that cuts right through this resistance zone. So this area plus this trend line at around $5.34 will be a significant challenge for Under Armour to break through on the first attempt. Expect some consolidation in this range. And then if the momentum continues, then we can break through. But notice all these levels of resistance right here should be very difficult for Under Armour to get through in just a couple days. Now, one thing I also want to know, when a price is down here at the bottom of a chart, guys, don't be looking to short these things. There's probably a lot of other shorting investors in this play. And if price starts getting and moving up higher on the charts, they're going to cover these shorts, which is going to accelerate the move up. So whenever moves occur from the very bottoms of chart, be very wary of shorting them. Stand back, watch the pattern, wait for a place to buy the breakout rather than short it, as you can then start riding the momentum up into the next resistance levels and then sell for profit at that time. Next up, FTAI Aviation had an incredible day today, pushing up over 14%. This is on the back of news of analyst upgrades, pushing price near $230. Plus, also, they've announced that they're converting their jet engines over into power turbines. So this is an interesting move for this company. And you can see investors reacted very nicely to it, pushing it up to new all-time highs on the chart. When I rewind it back out, notice this near-term parallel channel. We fought with it. And many times right here at the 50% area, the parallel also provided support when price came from the top. So that tells me this is a significant breakthrough, this 50% area of the parallel. Any momentum continues, I could see this hitting near $220. But should this take a while to get there, then that $230 analyst target could definitely be on the horizon. But near term, great move there for FTAI. If you want to jump on board with this, wait for a push higher tomorrow to close above today's price, and then also wait for price to pull back to the 50% area of this parallel, right around $191.81. And then we should see a nice bounce continued up for FTAI. Next up, we've got Rivian. Rivian here on the chart, you can see I've got a nice inclining parallel channel for this. Had a decent decline today, down 5.22%. Now, when it did decline this, you can see it's starting to come down into some levels of support from previous price action. We had significant breakthroughs here on the chart earlier. I did go over this about a month ago, giving you guys the stair-step process and how it could break out of Rivian. Now, we had a breakout from this inclining trend line, and the very next resistance wasn't far away right here at this trend line. Both of these trend lines now are flipping into support, all right? So this first level of support is going to be at $18.86, followed by $18.05. One of the main reasons for this decline was just a little bit of faltering in the EV space. So investors went ahead and took their profits. But guys, it makes sense. Look at the chart. We had an inclining parallel channel. How many times has the top range been tagged? Only twice. That's very rare for price to break through a top range of a parallel channel with only tagging it 2 times. So we should see this selling pressure back into support, which could be another buying opportunity for an eventual reattack of that top end of the parallel channel, which will continue to increase the longer it takes for price to get there. If I extend that out to April, as you see here on the charts, we're talking about $22.62. All right, guys, that does wrap up today's Trading the Close. Thank you so much for watching. Don't forget to like and subscribe. Send this out to your friends and family so they too can learn technical analysis in the charts. Guys, we'll have another show tomorrow, but keep in mind, Thursday, the markets will be closed. Look forward to seeing you guys tomorrow. Until then, I'll see you guys on the charts. Take care.